Hi, it's Drew Tignanelli. This is our November 2025 update. Michael, Christmas is just a month away. Can you believe that? 2026 is just a month and a half, 2 months, 2.5 months away. Unbelievable.
Absolutely. Time just goes by so quickly these days.
Yeah, well, anyway, we've got some great articles. Maddie wrote a great article on gratitude. So why don't you share what that's all about?
Yeah, so Maddie's article is called How Gratitude Strengthens Families and Financial Futures. And I mean, what a better time for an article like this. As the holidays approach, a lot of us focus on what to buy, what to cook, what to plan, but not as much a focus on why are we doing it? Who are we doing it for? Why are we doing it for them? And she has a line in there that I think particularly, highlights it well that, in a world that constantly tells us to want more, gratitude helps us appreciate what we already have, and make better financial decisions because of it. Drew, I can't tell you, especially parents, parents with young kids, a lot of times, even if they don't have the money, they feel obligated that they have to buy their kid this present or they have to take them on this trip. You see it, a lot where people feel like, oh, I have to have the new big SUV and in all these things, but in the long run, it doesn't, it's not always the best for the family.
Money has proven over and over that it doesn't buy happiness. And, there's statistical studies that says if you've got a little bit of money, and I think the number has been in today's dollars about 80, $90,000 of income a year. After that, there's not a lot of change in happiness, even if you're making $5 million a year. So why is that? And the answer is, in my opinion, it's what this article's talking about. If you're satisfied and content and have gratitude for what you have, you can find joy without having all those things because money doesn't buy happiness.
Yep.
That's the clear answer.
We talk about relationships a lot, especially a lot for being a financial advisor firm. And that's one of the things in relationships too, is if you've got to find that gratitude, what to be happy for in the people around you. And it can help you when things aren't going as well. So,
Well, there's no doubt that, we get those negative thoughts about the people that we love the most. And if you hold on to them, you're going to destroy that relationship. But if you constantly looking at the things that you have satisfaction and gratitude for about them, it'll just enhance that relationship greatly. But anyway, we have a video this month too coming up, right?
yep, we've got a video coming out, top questions a financial advisor receives. So that's just going to cover a lot of the common things that we hear about. So we figured we'd put it all on a video.
Which then brings us to a new thing. We do a radio show every Wednesday night, and then we turn it into a podcast. And the radio show and the podcast is just questions, random questions from people, and they ask the question on the radio, and right there we give them a good thought process toward the question they're asking. But we always want to be available not just to the people who drive and listening to the radio or the people that are listening to the podcast after the radio show. We want to answer questions for anyone that wants to ask a question and see and experience what a professional financial advisor should do. So we created a email address, questions at Money, Riches, and Wealth. That's the name of the radio show, moneyrichesandwealth.com. Questions at moneyrichesandwealth.com.
And that's
And
plural.
the and is spelled out, A-N-D. And any question, you have a friend, you have a colleague, you have a family member, they want to ask a question, just tell them. Send it to questions at moneyrichesandwealth.com. They'll answer it for you. It'll go on our radio show. People will be anonymous. We're not going to say John Smith from Baltimore.
Hmm.
Say something like John S. in Baltimore had this question he asked, or something of that sort. And then it'll be on the radio and it'll be part of the broadcast. So you can participate in the questions. So questions at moneyrichesandwealth.com.
Drew, I think this is going to be great for our audience who views us here, but even better for our audience who listens to us on the radios, which is Wednesdays at 6 p.m. on WCBM 680.
Yeah, that's the live show if you want to listen to it live, but we always strip the commercials out and podcast it after the show. So you'll get your answer to your question personally in an email, but then it'll also be broadcast on the radio and it'll be in the podcast. So
And the
you want to
podcast can
participate.
you can get to the podcast anywhere you get to podcasts. It's Money, Riches, and Wealth, the podcast.
And it's on Apple, it's on Podbean or Bean
Podbean.
Podbean. Is that what it's called?
Yeah,
Podbean?
Podbean.
It sounds like it ought to be the other way around.
And
Bean
Pod.
Podbean. Anyway, let's go on investments. A lot of gold being bought by central banks.
Yeah, so gold prices have really been going up. Um, the and people are kind of wondering why. And the simple answer is global central banks have been purchasing more gold than cash.
Yeah,
And,
but
and
let me tell you the other side of that story, Mike. Central banks have the worst history of investment decisions. When central banks start buying something in a big way, you can be sure that it's coming to a peak. So
well,
now,
at some
and
point the buying stops and the prices fall. But um,
yeah,
so China is actually one of the largest economies that's making the biggest impact on these global gold purchases into their central bank. Um,
right. So what happened is the Chinese and Russian central banks want to try to get away from dollar denomination, and they've been making the decision by gold as one of their alternative investments. Once they did that, price of gold started going higher. Once the average Joe saw the price of gold going higher, they're like, I got to get in. I got to get in. They start buying. The higher it goes, the more people get in, the more the frenzy gets going. Sooner or later, the central banks are going to be holding the gold, and next thing you know, the price is going to come down. That's what central banks tend to do. We'll see.
Yeah. So markets have been holding up for 2025. They're still, very high. But in the past month since we're shooting this video, we did have, one day where it had a more significant correction. Really not that significant, but it had a little correction. I think, 2 to 3.2%. And it's very interesting for us as financial advisors to see client reactions when we have these days. I mean, I had two clients refer to it as the market crashing. And I was like, hey, guys, 2 to 3% is not a market crashing. And Drew, like you had observed, what happened right after that?
Well, the next 2 days, markets went up fairly significantly, and who knows when the next prolonged downturn is going to start. There's nobody knows. It's the way that it's always been. Nobody really knows. So
It is
we just
important, though, that when we're in these long-term trends of upward markets, people remember, hey, there will be a time where they'll have a correction. It'll go down 15%, 20%, something. And to be prepared for it. Everybody's been enjoying watching, hey, do you know what my account hit now? But they've got to be prepared for, okay, I get it. My account went down and, just wait it out. Don't look at it if I don't need to. And, make sure that you're thinking about your next 7 to 10 years of what your money needs are. If you have a significant cash need in the next 7 to 10 years, it's probably good for us to make sure we've got something that's, less volatile that we can put whatever that cash need is in.
yeah. And we do that. We try to think that out for our clients. That's how we decide what models they ought to be in and so forth. But if you have some new needs that you think are going to come up in the next couple of years or so, you should definitely be letting us know. So anyway, markets are what markets are. And if the
Yep.
Fed cuts interest rates, they cut interest rates. But I don't think you're going to see really low interest rates like we saw 2, 3 years ago. We're just not going back there again, in my opinion. I could be wrong, but that's just my take on it. Anyway,
So, in other major news that people may speculate to, market, the government furlough at the time we're shooting this is still going on. There's certainly some risk for unemployment, and some other things, but at the moment, markets haven't really reacted that strongly to it. The only thing there is we are in earnings season. Not a lot of earnings have been reported at the time that we're doing this video, but The ones that have reported have stayed the par of, good trends and growth. But, a lot of government spending is cut, a lot of consumer spending gets cut. We could see some minor changes in earnings reports.
Markets like it when government isn't operating.
Mhm.
And there are reasons for that, Mike. So, but let's go on to our planning topics. This is the time of giving, right?
It's a wonderful time of giving. As we read Maddie's article, we're going to hopefully be thinking this season not only about giving people money and buying things for them, but giving them our time and our appreciation, gratitude. Something that I'll out Drew on this video for is that every year on our birthdays here at the consulate, Drew always gives us a note of gratitude that is
Yeah.
always appreciated. But since we are financial advisors, we're going to talk about giving money too. So, uh, one of our favorite ways for people to give money, if they want to give money and they have a required minimum distribution from an IRA or retirement account, is the qualified charitable distribution. I'm sure if you've been watching these videos, you've heard us talk about it before. But if the government says, "Hey, you got to take out $50,000 a year from your IRA," and you don't need it all of it or some of it or something like that, and you're charitably inclined, man, there's little better than to say, hey, send 5,000 of that to my church or send 5,000 of that to St. Jude's, and any combination thereof. So that's one great way. And I should have started with what I wrote last on this. One of the reasons that this month money giving is a very important topic is a change to the tax law that's happening next year. Drew, do you want to talk on that?
Which one is that,
The
Mike?
0.5% haircut?
Oh, yeah. Uh, so the next year, if I give $100,000 to, well, let me take that back. If I give $10,000 to charity, but my total income is $500,000, they're going to take 2,500 of my charitable giving and discard it that I only get a $7,500 tax deduction as an itemized deduction, and that's 0.5% of adjusted gross income. So 0.5% of 10,000 of $100,000 of salary of income is $500. So every 100,000 you're going to lose of salary of income, total income on your tax return. So we got clients that their tax returns show 1 million. That means that they're going to lose $5,000 of their charitable giving in the course of a year because of this new 0.5%. And in addition, if you have that high income, not only are you going to lose the 0.5%, Mike, but you're not going to get the full deduction for the 37% tax bracket you're in. You're only going to get a 35% deduction for that charitable contribution. That's the limit now. You can only get a charitable deduction, itemized deduction up to 35%, not the max tax rate of 37%. It encourages you. 2025 is a year to do big gifts if you're very charitably inclined and you're a fairly high income person.
Yeah, a number of people, what our advisors are talking people through is, hey, you give $5,000 to your church every year. Do you anticipate changing that in the next 3 years? No. Well, maybe give 15 this year and say, hey, guys, I'm giving you 15 this year. I'm not going to give you anything for the next 2 years.
Or they could put the 15 into the donor advice fund,
You're
which is
skipping down
another.
the list of the outline,
I
Drew.
know, I just did. I just did. I jumped to it. We go down, we give it into a donor advice fund, then they can just give 5,000 a year, but they got the tax deduction in the year they did the donor advice fund.
So the donor advised fund is an account you can set up. We can help you set one up where you can give a hunk of money in one given year, like this year, the last year before the haircut comes in, and you can take that full deduction in this year, but not give the money to the charity immediately. You can wait and say, okay, I'm going to put that 15,000 for 3 years of $5,000 a year. I'm going to put it all into the donor advised fund this year. Then I'm going to give them 5,000 in January, then 5,000 again the next January, 5,000 again the next January, and you got to bunch all of your deduction into this last year without the haircut.
But there's even a better part to that story. You could give highly appreciated securities to that DAF that you might have only paid 2,000 for, but they're worth 15 now. You get the full tax deduction for 15, even though you only paid 2, and you don't have to pay taxes on the $13,000 gain. It don't get better than that, Mike.
Absolutely. So we're jumping around a little bit, but when we talk about appreciated stock, one option is just what Drew just said. Give it to the donor advised fund, have no capital gain on it, and then be able to donate it out. Another thing, some people don't always give as a present, but they're giving to fund something, fund a purpose. And let's say that you want to help your daughter and your son-in-law start a business, or you know, they need a car, you want to help them buy the car, and they're in very low tax brackets and you're in a very high tax bracket. You can gift them appreciated stock and then let them sell it at their uh, capital gains rates as a way,
Which could be 0%. The
which could
first
be
$100,000 for a married couple of their income is taxed at 0% capital gains rate. So let's say I have a married younger, I have a daughter and son-in-law, and they have 20,000 of income. I could give them 80,000 of capital gains, Mike, and that 80,000 capital gain would be 0% federal taxable. Now the
state.
Maryland people, I don't even want to talk about them. They'll probably take something from it, but the Fed aren't going to take anything from it.
And then in the category of appreciated stock, again, stock maybe you bought for $10,000, 10 years ago, and it's now worth $100,000. That's the thing we're talking about. The last way you can do that is you can also donate it directly to a charity and, avoid that capital gain. But the other two are more interesting to talk about. So
And you have one here about the Roth accounts, if eligible. You might have grandkids that, got little jobs and making two, three, four, 5,000. Maybe they're in college and they're interning and they made three, four, $5,000. As a grandparent, you can put that money right into a Roth IRA for them and let that money grow 100% tax free. That's a really cool little way of helping your grandchildren. And next year, Mike, starts the Trump account. And I'm telling you, if this Trump account can do everything they're telling me you're allowed to do, you could accumulate over $90,000 for your grandchildren at the year they're born and convert it to Roth when they're 18 years of age. I can't tell you what the benefit of that would be when they turn 60. What would that 90,000 be if it's compounded just at 5%? It's going to be a lot of money. A lot of
absolutely.
money.
Now, the only problem before anybody gets too excited about it, we don't have guidance on it. We don't have anyone offering
Won't
it
get
yet.
that until July 1 of 2026.
Yep. So,
Trump accounts.
uh, but yeah, the Roth accounts for kids is a great, great option. It's important to remember what the gift tax threshold is. So, a lot of people think they get this misconception that if they give money to their kids will have to pay taxes on it. That's not what the gift tax is. The gift tax is if you give over a certain amount, then and you pass away with a taxable estate, which Drew, give me the numbers for right now
15 million per spouse.
per spouse. If you die and both and you and your spouse had in total more than 30 million
30 million. Right. 30
and
million.
and you gave one year you gave 20,000 this year instead of the 19,000 that the is for this year. And I'm not going to go through all the specifics, but if you give over the gift tax exclusion, when you go to settle your estate, they're going to say, hey, he had 31, $30,100,000 in estate, so he's going to have to pay tax on that $100. So
Oh,
very complicated. Talk to your advisor to get explained to you, but the number per person, per gift giver, per gift receiver is 19,000. So if you're a husband and wife, that's 28,000 that you could give to your daughter, and
38,000.
38,000, sorry. I knew something. As it came out of my mouth, I thought, I don't think that's right. So 38,000 to your daughter, and you have a son-in-law, you could give 38,000 to him as well between the two of you.
And 76,000, yeah. But you know, the short story is, Mike, is that if you're giving money, you don't have to worry about this $19,000 threshold if you're not going to be worth more than, let's just call it, $10 million in your lifetime. It's probably going to be irrelevant. And right now the number's 30 million. But
But
you
they
know,
changed it.
they can change. Yeah, President Biden wanted to drop it to 6 million. So it can change. Wes Moore wanted to change it to 4 million in Maryland, right?
Yep.
So, but the beauty with Maryland, Mike, is that they don't look at gifts. So that's an interesting piece. The point is that gifting money is totally misunderstood by the public. Totally misunderstood.
So the last item I'll bring up in giving, and then we've got one other topic to share with you, is if you are a grandparent and you want to help pay or pay for your children's grandchildren's education, there's no threshold on you being able to make payments directly to a school or college for your grandchildren for gift tax purposes. So that doesn't
And
matter
so
at all.
you could pay Harvard $90,000 and it doesn't count against that 19,000 we were talking about. Also true for medical bills too.
Yep,
Medical,
medical bills, but you got to
medical.
pay them directly. Don't
Yeah.
give it to your daughter to pay for your grandson's education. Pay Harvard, pay Towson University, pay Florida State, pay wherever they're going. So, Drew, why don't you wrap us up with this last item? I think you've read more about it than I have, the Schwab mortgage rate discount and concierge service.
Yeah, you know, a lot of brokerage firms, because they're sales organizations, Mike, they try to do these little gimmicky things to make people feel that, wow, working with us is a really big benefit. You know,
Hmm?
Merrill Lynch does it with Bank of America, Wells Fargo does it with their brokers, et cetera, et cetera. And what they do is they say, if you're a client of ours and you've got money invested with us, we're going to give you a discount on your mortgage and you'll get a rate lower than anyone can get anywhere else because you're a special client of ours. Well, you know, that's not a unique thing. Schwab does the same thing for clients of ours, and Fidelity does something similar. And Schwab works with Rocket Mortgage, and they give you a concierge manager to manage your loan for you. They coordinate it. They get it. They have a track record of getting them done in like 26 days, and they give you up to a full 1% discount depending on what size of client you are. Minimum size is going to get like a 1/4%. A big client's going to get 1%, and then there's anything in between. It's exactly like any other brokerage firm. So don't think that they're offering somebody something unique. This is fully available through any organization. If you feel you want to look into it, you need to look into it. Just let us know. We'll talk and link you up with Schwab, and if you can get that discount and it works out well for you, then that's great. You know.
Yeah, the only thing I'll add to it is it's definitely good to quote that mortgage in a couple places, but it's also really important that you quote it the right way, that you don't have lots of pulls on your credit report. So normally they'll give you a estimated rate based on a soft pull that doesn't negatively affect your credit. So always good to check more than one place.
Yeah, and we also like better.com is another one that we've used before. But Schwab's a good client. Schwab Concierge Mortgage Services, they do a great job and they give you a little discount. So
Yep,
anyway, I
absolutely.
think we're finished here, Michael.
I think so.
Anyway,
Happy holidays.
yeah, this is Drew Tignanelli saying God bless.